45 years, 0 name changes, new offices, more staff, improved technology to better serve you. Education, services, investments. Think real estate, think Marshall Reddick. Brokerage, property management, private lending, creating financial independence through real estate since 1979.
I think we can go ahead and get started. What do you think, Steve?
Yeah, let's jump right in and go for it.
Great. Everyone, welcome. Hi. My name is Krista Kirby, here with Marshall Reddick. I've been here since April or May, I think I started, but I've been licensed for about 3 years. We'll click over here so we have this to go off of. Let's see where we want to start. All right, we'll take it all the way back. I started my professional career in corporate America with Bank of America. Started in small business lending, eventually promoting within. I ended up working with a lot more high net worth clients within Merrill Lynch. That was an experience, but taught me a lot. I was actually able to purchase my first home while I was pregnant with my daughter at a very young age. We lived there for a couple years, eventually turning it into a rental property. And I became a landlord at a very young age. I could have definitely used some professional property management back then because that was hard. But it definitely sparked my interest with real estate. It gives you a lot of freedom with your time. I was able to stay home with my second son for a few years before returning back to work. So yeah, that's what really got me started in real estate. I love being an advisor here. Everybody at Marshall Reddick is just a wealth of knowledge. I've been here for a few months, mostly doing leasing throughout Orange County, Riverside, and the Inland Empire, usually filling vacancies under 2 weeks, which has been lucky for me. I've got some really great owners. Thanks, Steve. I love getting to know my owners and investors. I like hopping on phone calls and getting to know them personally, just so that I know what their goals are and what they're looking for and working with us so I can really be there to help them. I'm just excited to keep learning here and growing with Marshall Reddick and investing myself. Let's see, I'll go ahead and click over. Give me 1 second. Okay, and most of you should be pretty familiar with what we do here at Marshall Reddick. We have our 4 different divisions. First is going to be our real estate brokerage, where we do everything for residential real estate. We help people buy and sell their primary residence along with their investment properties. And along with that, obviously, comes professional property management. So our investors, oops, how do I get back there? There we go. Most of the time need somebody to help manage their properties. So we do that for them. Give me 1 second here.
Bear with us, guys. We've been battling some technical difficulties for the last hour. So if things break or get a little weird, we're trying to get it under control. So thank you for having patience as we do so.
Anyways, back to that. Our property management side, we help manage everything you need for property management. We help you with the marketing, leasing, finding you the perfect tenant for your home. Even, oops, sorry, 1 second. Hold on here. Okay. There we go. I'm on the right slide. Hopefully everybody can see that. Moving on, we have our private lending department. We're not your typical conventional lenders. We do more short-term loans, more like fix and flips, new constructions, short-term bridge loans. to help our investors with their purchases and repositioning their investment properties. Moving on to our fourth division, we have our investment fund. Just like owning a traditional rental property and collecting a rent check, our investors can put their money to work by funding mortgages and collecting those payments. This can be done one-on-one with a borrower or through our mortgage fund, which spreads that through different investments across many loans and pays out quarterly. And that is our four divisions. Right here, you can see a map of all of our offices. Right here in Newport Beach, we have our headquarters. We have an office in Los Angeles and 5 offices in Texas. We have Dallas, Austin, Houston, New Braunfels, and San Antonio. Over in Tennessee, we have Clarksville and Nashville. And in South Florida, we have Cape Coral office. Here's a picture of some of our staff, an older photo. Fortunately, I'm not in this one, but I will be soon. And with all of that from Marshall Reddick, we'll go ahead and introduce Steve. Steve, if you want to go ahead and do that. I know you've been a long-term client of Marshall Reddick investing yourself, if you want to talk about that a little bit.
I sure have, and thank you, Krista. And hey, good evening, everybody. Thank you so much for being here. Thank you, Marshall Reddick, for having me again. And thank you for sharing some of your precious time this evening. Go over insurance. I'm always kind of blown away how many people actually show up to these to learn about insurance. So I'm honored that you'd spend your time. And let me give you like just 1 minute about me, because that's not why we're here, but it's nice to know sometimes who's talking at you. So my name again is Steve Page, and I am a fellow real estate investor. I've been a client of Marshall Reddick for 13 years. Is that right? Wow, yes, that really is right. 13 years now is when I bought my first rental property. And I bought and sold in 5 different markets. And I'm also an investor in the Marshall Reddick Fund that Krista just mentioned as a capital partner. I've also done some in the private lending. And I'm also, of course, a licensed insurance agent, which is what we're here talking about tonight. So there's a little lag in my slides here, guys. So bear with me with that. But we have what I call the Investor's Choice Program. And the whole idea is just hassle-free insurance for real estate investors. How can you're buying a new property, or maybe already have one, you need it insured, you got to protect your asset. How can we make this as smooth and easy as possible to just get you what you need and get it taken care of and done right? So to me, there's always a balance of proper asset protection with maximizing your cash flow, right? We want the lowest cost policy we can get, but we also want to make sure you have the right protection. Yeah, I don't know why my slide just shifted there. Maybe it's got a delay. Yep, and it's just shifting. I didn't even do that. It's moving around. I don't know why it's doing that. All right. Well, we'll just move. Oh, there it goes. It's coming back. It's coming back here. Yep, there we are. So I always look at it, there's a balance between asset protection and cash flow. Cash flow comes from, we minimize our expenses, insurance being a cost of business. I always think of every little property as its own business, and there's cost of doing that business, insurance being one of them. And the whole point there is, ideally, we want to get the cost of the policy as low as possible, because that just translates to more cash flow on the back end for you. At the same time, we don't want to go so low that we're sacrificing asset protection, because God forbid anything ever happened, the couple $100 you might save on premium could end up costing you tens of thousands, even hundreds of thousands, depending on the issue. So it's always finding that unique balance. And I will say that's different for every property, that's different for every area. And that's different for every client too, because everyone has their own risk tolerance. Some people, I've had clients say, hey, I'll take a $50,000 deductible. I don't care, I've got the cash. Let's just make it lower cost. Other people say, well, there's no way, I don't have $50,000 lying around if anything happens. Make it, $1,000, $2,500, something that is more affordable in case it's needed. So I like to work with everybody, figure out exactly what your needs are, what your concerns are, your risk tolerance, and then ultimately we're going to find the best policy for you. So with that said, we use only A-rated carriers. Those are the ones that are the most solvent and the strongest. You want to make sure, that's the whole point, right? That if you need it, they're going to be there for you. And I have a low price guarantee. I want to make sure we get you the lowest cost possible with the right protection, of course. Again, because that's just more cash flow for you. Great service team and also insurance advisory. And just because I am a fellow investor, I understand what you need and what you're looking for. And I work exclusively, there go my slides being weird again. I work exclusively with real estate investors and strictly by referral only. We do that because it's more like a private club. We're closed to the public because rather than spend a bunch of advertising dollars on trying to get people in and all that, I'd rather just take the money that would have gone towards advertising and reinvest it into things that are going to help you as a client. That might be more technology, that might be apps, that might be staff, that might be whatever it is, everything that's going to help you guys do what you need to do. So that's how I like to do things. And of course, everything is always custom tailored to, like I said before, your specific goals, and finding that balance between asset protection and cash flow. And it is crazy. There's just more and more people joining us by the minute, it seems. And just me, I like to make, it's insurance. It's not typically thought of as very fun and exciting, but I want to make it as fun for us as we can. Hey, there you are. We missed you, Krista. All right. So
I'm not seeing any questions in the chat yet. I know you wanted to open it up to make sure we're answering people's questions.
I think my slides got a lag on it, but thank you for the reminder. So I want to address that just real quick, guys. So I do have a presentation for you. Happy to get into that if you like. That said, I know every single person attending, you came here for a reason. You said, I'm gonna give some of my precious time to be here. It was because you were looking to learn something, looking to get something out of it. There's a reason you're here. And whatever that reason is, I want to make sure I'm addressing that. That's my primary concern. So yeah, I have a presentation, but I'm so much more interested in just having a conversation with you guys. So let me know, why are you here? What are your questions? What are you concerned about? What do you need? What are you looking for help for? And I will do that stuff all night long. So if you have a question, post it in the chat box. I can't talk today. Post it in the chat box. And don't worry, I won't call you out by name. I won't make you feel silly. There's no dumb questions. The only dumb question is the one that doesn't get asked. Okay? So feel free, don't be shy. Whatever you're here for, whatever your concern is, and we'll go ahead and address it. And Krista, I don't know if I'm able to actually see any questions that pop up on my side. So
I'll keep an eye on them as well.
Yeah, thank you. If anything pops up, just let me know. Feel free to stop me, and we'll address the question at hand, because again, that's what we're here for. I want to make sure I'm taking care of everyone's concerns and needs. So just in case anyone doesn't know, a lot of times we work with brand new investors, and sometimes those investors haven't even bought a primary home yet. So what is insurance? And essentially the shortest answer is it's a private contract between you and the insurance company. And that contract is what's called a policy. That's your insurance policy. And the whole point of that policy is essentially the insurance company promising to restore you to the financial condition you were in prior to a loss. What does that mean? If something happens to your property, right, your asset is damaged, you've taken a financial hit. So the whole point here, the insurance is saying, hey, we'll bring you back to the financial condition you were in before that bad thing happened, that thing that's impacting your assets and impacting your finances, right? So what kind of things? What do we consider a loss? Well, that's things like fire and water damage, and wind and hail, lightning, smoke, explosion, vandalism. That can also be liability. All kinds of personal, it says personal insurance. That should actually say personal injury. And if you're wondering, it's legal jargon. There's personal liability and there's personal injury. Personal liability is if someone is physically injured on the property. Personal injury is if their feelings are hurt. So where that would come in is usually something like a wrongful eviction suit. If a tenant came in and said, hey, I was evicted and it wasn't right, and they wanted to get a lawyer and try and start trouble, that's personal injury coverage. And so that's the difference between personal liability, just while I saw it. And every policy can be a little bit different, so you want to double check, make sure it is covering all the things you're looking for. One thing to note, because it seems like a lot of people don't know this, I know I certainly did when I got into this, flood and earthquake are always separate policies. So if you have a landlord policy, if you have a homeowner's policy, that isn't, more than likely, isn't going to cover earthquake, damage from earthquake, or damage from flood. Those are always separate policies, and that's true for every carrier and for every too.
Hey, Steve, we had a question. I don't know if you went over where you are licensed to provide insurance, but we had someone ask if you provide insurance in Toledo, Ohio, and in California as well.
I absolutely do. Toledo, Ohio is actually where I bought my first rental property, and I'm actually from California. I don't think we might have missed a slide about more about me. Just in case, I'll do that. My name is Steve Page again, originally from Newport Beach, where the Marshall Reddick office is. I now live in Texas in the greater Houston area in a spot called the Woodlands, which is awesome. And yes, we do insure Ohio, we do insure California, Texas, Tennessee, Florida, all the major Marshall Reddick markets, and many, many more. We've got Washington, we've got Arizona, we've got, I don't know, I could do the whole list, but I think we're up to, I want to say it's around 20 different states now. So chances are, if you're in, definitely if you're in one of the Marshall Reddick markets, or if you're in one they've been in the past, or another hotspot for investing, chances are we're there.
We have a more specific question for you, Steve. Can you find an insurance policy for a 17-unit condominium complex in Glendale, California?
That's going to be one of the harder ones these days, but we can do it. We've got, you know what? I have a backup. I have another question. Are we looking for the HOA master policy? Are we looking for the entire complex? Or are we looking for maybe each individual unit if they're rented out to different or owned by different people?
Both.
Both? Yeah, we'll find something. See, luckily I'm an independent broker, so that means I can shop all the different carriers on your behalf. We have relationships with a lot of different carriers. And then if for whatever reason those aren't working, I have backup plans for those. And if those don't work, I even have backup plans for my backup plans. So I've only been stumped once to date, and it was a house in inland San Diego, California, and it was built like a castle. It was, I think, 20,000 square feet. And I actually,
on a cliff.
Yeah, exactly, with an active fire at the door. But I did end up finding something, but no one would do it for less than there wasn't a single carrier that would do it for less than 100,000 a year, which was just crazy. So that one didn't work out. But other than that, that's the only thing I found that you can insure. And I did do it was an 8-unit apartment complex in Glendale pretty recently. So there are still options out there.
So yes, to answer your question, he can most likely find you the best policy for that, and you'll have his contact information at the end of this. We can send to you to get that. Right, Steve?
Yeah, it should have been at the beginning, but I think the slides.
We'll give it to you again.
Yeah, good. Yeah, so no worries there. And love the questions, guys. Those are fantastic. Keep them coming. And yeah, my slides are wonky, so we'll just see what happens. Okay, so the current insurance climate right now, it is a weird market for sure, especially if you're in certain states. Some are more difficult than others, some more challenging than others. Some of that's due to climate issues, some of that's due to recent claims. We have those awful LA fires more recently in the Los Angeles area, and so things like that change. Carriers come in and out, and they come in and out based on economic conditions. They come in and out based on political conditions, and that's why it's so nice being a broker. Is I always have an option, and so that's kind of the benefit. Is we know the landscape, we know what carriers are currently working and in which areas, and what to do about it, and where to go to find you the right deal, and also the coverage. So the big concerns I typically hear these days are, what if a tenant damages your rental property? Some people have been concerned about tornadoes in Texas, Tennessee. I also had some questions about tornadoes for Kentucky and Oklahoma recently. The fires in California, like the ones we had a few months ago. Hurricanes in the south, Texas, Louisiana, Florida especially. And then a lot of people, insurance costs have been going up, and what we can do to lower them. So that's a lot of the focus of our talk here tonight. So what do we do about all that? Because there are challenges to overcome in some markets and some areas more than others, like Glendale. It can be tricky. So the first thing is we just get educated and adapt to the current market cycle. Just like interest rates go up and down, just like home values go up and down, just like everything fluctuates. So does insurance. So does the insurance landscape. And right now, the insurance landscape, especially in certain areas, is a little more challenging. And so we have to know how to navigate that. Another thing is knowing the coverage, really knowing your coverages and what they are and what they do and what you need and what you don't need. And you may find that you were being covered for all these things you don't need, or maybe that you just don't care about. Well, we can remove those and save you some money. Or on the flip side of that, hopefully not, but I've seen a lot of it, especially in the last year or so, people find themselves, they don't have as much coverage as they think they did. You know, they thought they had water coverage and it turns out they didn't. Or they thought they had full water coverage. It turns out they only have, you know, $10,000 worth. There's a lot of carriers are doing things like that where we really have to go through these things and say, hey, just so you know, these are some considerations with this policy. Are you okay with that? If you are, fine. If you're not, well, then let's find a different alternative. Or in some cases, if the cost of the alternative is just prohibitive, which I had one like that the other day. That doesn't happen too much, but every now and then, some areas more than others. If that's the case, then sometimes we say, hey, let's just go with this policy that maybe it's not perfect as a temporary solution. And then we'll just keep shopping this on a regular basis. And as soon as something better opens up, we're going to switch over to that. And then usually when that happens, we can also save you some money as well, which again, increases your cash flow. So another thing, we can play around with deductibles. I already said that one already. We can decrease or eliminate coverages you're not concerned about. I didn't even hit the button and my slides are changing again.
Uh-oh. We're going to figure this out eventually.
One way or another. We'll get it, Keith. There we go. Anyway, the bottom line
We did have a question, Steve. I'm going to cut you off really quick.
Perfect. I love it.
Do you do insurance for pad split or co-living homes?
Yeah, I've done a few of those. Usually it's specialty carriers, but we can find them. I've done it where maybe, I've seen it in two different ways. One is where someone owns a home, and if I'm thinking the wrong thing, correct me if I'm wrong, and then I'll adjust accordingly. But let's say you own a rental property, it's got 4 bedrooms, and you rent each room to a separate tenant. There are options for that. I think that's what you're getting at. But there's other things I've seen where maybe someone owns a property, they rent it to a single tenant, which bypasses a lot of potential insurance issues and things. And then that tenant, that single tenant, sublets each room out individually. And I've seen that happen too. There are, that can make it more challenging sometimes depending on the area, but I've always been able to find a solution. Move ahead here. There we are, there's our buddy Warren. All right, so the whole purpose of insurance is, I always think of it as like the billionaire mindset. And Warren Buffett's rule number 1, if you've never heard it, he's the guy who'd know, is rule number 1 is never lose money. And rule number 2 is never forget rule number 1. And that's really the whole purpose of insurance, right? Is if you had an asset that's worth, say, $500,000 and it burned down and it was uninsured, well, now you're out $500,000. How long is it going to take you to get another, $500,000 or a down payment or whatever it may be to bring yourself back to the financial condition you're in? Depending on your income and your financial situation, that could be a long time. For most people, that would be a little bit, right? But if you have an insurance policy, and I'm just making up arbitrary numbers here, but let's say you had that $500,000 value property insured and the policy costs you $2,000 a year, and then it totally burns to the ground. Well, now you don't have to make another $500,000 or at least another down payment on that. All you have to do is pay the deductible. Maybe it's $1,000, $5,000, whatever it may be, whatever we decide. But all you have to do is pay that deductible, and the insurance company is going to rebuild the $500,000 home and bring you back to that condition you're in, so that you've accomplished Warren Buffett's rule number 1. You didn't lose money, right? And that's the whole purpose. It helps you by being insured properly. If just in case anything ever does happen, it helps make sure you don't lose money, so you don't have to go backwards a step. You can just keep moving up from where you were.
Mary had another question for us. Are umbrella policies more cost effective in providing extra coverage among several homes instead of having high policy limits on each individual house?
That's a good question. So to qualify for an umbrella, typically all the underlying properties have to have a liability coverage of at least $500,000. So let's say you own 4 rental properties. The rental property policy, each of those 4 landlord policies you would need to have a liability coverage of 500,000 or more. And once they have that, they now qualify to be covered under that umbrella. And the umbrella will provide liability coverage above and beyond that. So let's say you had a $1 million umbrella and you had those rentals with $500,000 in coverage. And someone claims they got injured on the property, wanted to get a lawyer and sue because they're just going to be difficult. You have $500,000 in coverage on the underlying, we call it the underlying policy, the landlord policy for that property. And then if, for whatever reason, let's say they want to sue for $1 million, but you only have $500,000 in coverage. That's where that umbrella is going to swoop in and save the day. It's going to fill that gap to provide that extra $500,000 in coverage. And what's really cool about umbrellas is a lot of things, but it's the lowest cost form of asset protection, which is great. Oftentimes they're only maybe $300 or $400 a year. Just depends on the situation, how many cars in your home, how many drivers, how old the drivers are, if they're younger kids, that can be more of a challenge, make it more costly. How many rental properties you own, if you have motorcycles and golf carts and all those kinds of things. So each risk is a little different, but on average, I think $300 to $400 a year. And that one umbrella policy will cover everything under it. So your single umbrella policy for that little bit of money per year will cover your primary home, it'll cover your auto, it'll cover all your rental properties, it will cover golf carts, motorcycle, boats, jet skis, all that kind of stuff, with just one policy, which is really cool. So you're having extra liability protection above and beyond all those underlying policies, whatever they may be. And there's one more thing I was going to say about that. Oh yeah, that's it. I have this one umbrella carrier that I love right now because they will allow us to add LLCs and trust to it free of charge. And we can add a bunch of them, which is really nice because sometimes a lot of carriers don't like that. They say, oh, if you have an LLC for a holding company and maybe owns a few properties, they may say, oh, if you want extra liability coverage for that above and beyond the underlying policy, each landlord policy, then they're owned by an LLC, so you have to get a commercial umbrella. That could cost a couple $1,000s. And so now you have a personal umbrella, and now you have to get this other commercial umbrella to cover each individual entity you own. This carrier says, hey, no, we understand what you're trying to do. We understand you're investors, you're looking for asset protection. As long as that LLC is nothing more than a holding company, meaning it's only owns real estate, it's not also a restaurant or like a window washing company or some other business function. As long as it strictly holds real estate only, we can add that LLC and you have more coverage on your umbrella for no extra cost. So we can save you a lot more money. And
so
in
short, sorry to cut you off.
No,
in short, an umbrella policy, as long as it is done right with the correct carrier and you, of course, is definitely more cost effective.
Absolutely.
And then another question,
sure,
kind of pertaining to that one. Will insurance help cover attorney expenses for a lawsuit defense?
I just had that question come up the other day, and at least the carrier I checked at, they said yes.
And from my personal experience living with an attorney, I believe it does as well. And as long as you win, you're gonna recover those funds anyway.
Also true. All right, any others coming up in the chat box there?
That's it for now, unless anybody else wants to ask anything.
I love the questions. These are awesome. Okay. So some of the most common problems we're seeing right now, and it skipped ahead on me again, but, oh.
Got it?
I think we need to go back one more, unless it's just my screen that has the lag. Yeah.
Are you on the most common problems we're seeing right now?
Yeah, with the property manager being the first one?
Yep.
Okay, can we go back one more?
Yeah.
There's one before that.
There you go.
There it is. All right. So some of the most common problems we're seeing right now is that people have, this is a huge one. A lot of people have the wrong type of policy. So the way I'm seeing a lot of this is you got your primary home, you had it insured with the homeowner's policy, that's great. But then at some point you decide to move and you have a new primary home and you convert your old home into a rental property, but you still have a homeowner's policy. And that won't work. We need to make sure you get a landlord policy. Reason being, insurance companies can be really nitpicky about occupancy. And so if there was ever a claim on that home that's now a rental, they could come in and say, hey, this is a rental property. You have it insured as a primary home, and then they have potential grounds to deny the claim. And that would be a huge bummer. We don't want that. So that's a big one. I'm seeing, gosh, I think I see at least one of those every day.
Not with your Marshall Reddick clients, so we make sure we have them insured right.
That is absolutely true. Marshall Reddick is on it. I get more of those from Marshall Reddick saying, hey, this is incorrect. We need to get this right. And it's awesome. And now everyone's properly covered, and which is great, because that's the whole point. Another thing we're seeing, sometimes people have very, very little liability coverage, or they don't have enough of that personal injury coverage, the one that helps with things like wrongful eviction, like I mentioned earlier. So that's one we can see a bit of, and those slides are getting crazy again.
Are you clicking through them, or am I? I'm not touching it.
I'm not touching it either.
Okay, let's go right here. You were right.
All right. Another thing we're seeing is a lot of people are finding themselves underinsured. They had enough insurance, and in the last year or two, we've had all this inflation, right? And so now it might cost $100,000 more to rebuild the home than it did when you got it. Yet the insurance hasn't caught up. So it's back to our example of a house that might cost $500,000 to rebuild. You might only have $400,000 in insurance on, and it's underinsured now because of inflation. So it's always good to do a policy review or even an entire insurance portfolio review. Make sure everything's current, make sure it's correct. If anyone's interested, I'm happy to help. And then wrong occupancy, I just mentioned that. Not only can it be a primary homeowners versus a tenant, but there's subcategories with the tenant thing, like we talked about the room sharing or the home sharing. That can be one. If it's a vacation rental, like Airbnb, one of those types of properties, that needs to have a separate occupancy. And then also if it's vacant, that's another one. So again, occupancy can be a very big deal. We want to make sure that's correct. Another one that is kind of an occupancy situation is if you are doing construction on a home, like maybe you're doing a flip or you're going to do a big renovation before you put a tenant in, we need a whole separate kind of policy, in most cases, called a builder's risk. And those are used if there's any kind of work being done on the home or construction or remodeling, and the home is also vacant at the same time. Because if a property is vacant too long and there's construction going on and you have a regular policy carrier and something happens, a carrier could potentially say, hey, you have the wrong kind of policy, we're not covering it. So we always want to make sure we know exactly what we're insuring and what the plan is for the property. So really getting you set up correctly. And then you have that peace of mind. And that's the whole point of this, is peace of mind. Another one is not having extended replacement coverage. So the way that works is a lot of policies for property anyway will offer additional coverage. Let me just give an example. Let's say for easy math, there's 100,000 in coverage, and then and it would cost in this example 100,000 to rebuild. And there's something happens and it's a total loss. They will give you up to that $100,000 to rebuild, plus the extended replacement coverage, since it's a catastrophic loss. Usually that's an extra 25% or up to 50% on top of the coverage limit. So again, if you had 100,000 coverage, you could actually have up to 125,000 or 150,000 to rebuild in the event of a catastrophic loss. Another one is something I mentioned earlier with exclusions people may not be aware they have, like maybe there's no water coverage or there's very, very little. And then hopefully we catch that sooner than later. Sometimes the property manager is listed incorrectly. Some people find out they have insanely high deductibles that they didn't realize they signed up for. Sometimes we don't have enough loss of rental income coverage, or maybe none at all. So what happens there is if you have a property and there's damage to it, and it has to move out temporarily while the damage is being repaired, you can get compensated for that lost rental income while they're living elsewhere. That's important if anything happens, because otherwise you're still paying the mortgage. Incorrect integration of trust, LLCs, and umbrellas. It's really, really important all that's done properly. So if you have trust, if you have LLCs, if you have umbrellas, we just want to make sure everything is aligned so it's working as intended. Last thing you want to do is, find out you had a trust or an LLC or an umbrella, but because it wasn't integrated properly, and something happens and there's no coverage, or Incorrect structuring for multiple structures on a property. This way, a lot of times we'll see this where maybe someone has a front house, back house situation. If the structures are separate, like they don't share a wall, each structure needs a separate policy if there's different occupancies. So like maybe the front house is your primary home and the back house is a tenant. Each one would need its own policy. Or maybe it's a tenant in each property. Each little structure would need its own policy for that. That's one we see. A lot of times people have, and sometimes the agent didn't even understand that these need to be separate. If there's a shared wall, we might call it a duplex. That's usually the difference there. If it's a condo or townhome, we want to make sure the HOA is integrated properly as well. That can be an issue. By the way, sometimes there's discounts for that too. But all that to say, all these kinds of things that we want to make sure are correct. If they're not, they can lead to denial of claims, false expectations. Oh, I thought I had coverage and I didn't. Oh no. Losing time, losing energy, losing money, paying more than you need to, and just unnecessary hassles and headaches that if we just went through everything, a little more diligently and made sure we're on the same page and we know what's going on, then we can avoid all that stuff. That's the idea. Any other questions come in before I keep going? We're good for now. Cool. Okay. Hopefully that means we're doing a good job. So the recent California fires, I get a lot of questions about those. One of the big ones is we want to make sure the named insured is correct on the policies. I didn't experience what I'm about to share with any of my clients. Thankfully, I heard it. I heard a horror story that I hope is not true, but just in case, there was someone's, it was their primary home. And at one point they changed title to a trust they owned. And they didn't update their insurance policy and they lost the house in the fire. And the carrier said, the trust isn't on the policy, it's still your name, so we're denying the claim. And that's a nightmare. So we always want to make sure we have this constructed correctly. We also want to make sure you're not underinsured, that you realize what coverages you have or don't, and what your policy covers, what it doesn't cover, and make sure you have enough structure, enough coverage for things like the other structures, loss of use being the lost rental income. Other structures would be things like fences, a swimming pool, a patio, a gazebo, a shed, a detached garage, any other structure on the property that's not the house someone actually lives in.
We did have a few more questions come in, Steve.
Perfect.
First one, do you do work in Hawaii?
A little bit. Yeah, I haven't done a ton, but I do have Hawaii. I have some options. I don't have a ton of options right now, but we're always getting more and more all the time.
Second question is, how important is HOA insurance when the property is in an HOA? I think it's called assessment loss.
Oh, loss assessment.
Yeah.
Yeah, so okay, I'll back up one step just in case anyone doesn't know. So when there is a big, let's say condominium complex, there's the big building, the structure overall, and then there's each individual unit inside that big building. So typically the HOA has a master policy that covers the whole structure. They cover the building. And then each individual unit owner, condo owner, they're gonna have a policy that's called a condo policy or a townhome policy. They're one and the same. And it just covers what they call walls in. So it's everything interior build out of the unit. And so we want to make sure those are properly integrated. And then I just lost my train of thought doing the background. Give me the question again one more time.
How important is HOA insurance when the property is in an HOA? I'm not really sure what you mean by that question. Maybe we can get some more context on it. But I live over here in Irvine in a townhome, and I lease as well. So I know that my HOA covers the structure, and then I have my own policy for everything within the walls. So I know what you're saying there. I'm not sure what they meant by HOA insurance. HOA has to have insurance for the structure. What was that?
I thought I heard at one point, did you say loss assessment or something about loss assessment?
That's what the end of the question says. I think it's called assessment loss.
Okay, yeah, I think that's probably what I'm thinking of. So loss assessment, this would be the condo owner on their policy, and that could be whether it's your primary home or it's a rental condo. but your condo policy, there is a type of coverage called loss assessment. So if the HOA says, hey, we're going to assess everybody, we need a new roof, everyone has to pitch in $10,000, or there's a raccoon infestation over there, and we need to get that taken care of. Everyone has to pitch in a certain amount of money to get that taken care of. That's loss assessment coverage.
Got it. So yeah, he said right here, hold on. Not a condo or a townhome with common walls, hallways. He said SFR in an HOA.
Oh, if it's a single family home and it's a normal situation, then you would just have a regular single family home policy. If you live there, it'd be a homeowner's policy. If someone else lives there, it'd be a landlord policy. If there's an HOA, that just, in that scenario, that may give you a discount depending on the carrier, but that would be the only thing needed there.
Okay. Hopefully that answered your question.
If not, clarify it or let us know and we'll keep going. Happy to. So named insured, that's when we're saying we want to make sure is on the policy. That's who or what entity the policy is in the name of. And we want to make sure that's correct. So if it's your trust owns the home or an LLC owns the home or you own the home, we want to make sure that's the named insured so that everything is aligned there and working well. And definitely don't want to be underinsured. According to an underwriter I spoke with the other day, they were saying the estimated cost to rebuild in California right now is between $350 and $600 per square foot. That's depending on the area, of course. You know, if you're in Beverly Hills, it's probably closer to $600, and if you're somewhere maybe a little more remote, it's probably closer to $350. That was, you know what, that was probably 2 months ago when I spoke with him, and there was still a lot of things happening after the fires. It's possible that figure is a little bit less now, but that was the most recent one I've heard confirmed. And of course, every state's a little bit different too. Like in Texas right now, I've been hearing 175 to 200 per square foot. It seems to be normal. Seems like a lot of states outside of California around the 200 per square foot. So the bottom line is we want to make sure you have enough coverage to rebuild your home. So in other words, if you have a 1,000 square foot home in California, you want to have at least $350,000 in coverage so you can make sure you can rebuild that. And hopefully you never need to. I think my slides are being weird once again. There we go. Ensuring you have all the property coverage. Some carriers offer more flexibility than others. Some will let you delete a lot of things that you maybe don't want, and some will let you name certain coverages that you want. Others are a little more strict, or it's more of a package deal. Typically, when it comes to property coverage, there is a floor. Every carrier will say, hey, there's no way we're going to insure this for less than X. But we can always increase it above and beyond that to a point. Most carriers will go up to, some will go up to $1 million, some will go up to $500,000, some will go up to $1.5 million, and then there's ones that go up from there, depending on what we need, what we're trying to do. This is already kind of covered. It's what are other structures, just any other structure on the property that's not the main home. So like I said, a pool, a barn, a shed, gazebo, fences, walls, that sort of thing. Loss of use, we talked about that too. That's protecting you or compensating you for lost rental income if the tenant has to live elsewhere while repairs are being done. Know what your policy covers and what it doesn't. You're always welcome to reach out to me. I'm happy to help. You want to make sure you have enough of these coverages as needed, just based on whatever your situation is, and also whatever your concerns are. If you live in a flood zone, you may want a flood policy. If you live on a fault line, you may want a earthquake policy. But always feel free to reach out, and I'm happy to evaluate anything for you and provide recommendations, shop it around, see if I can find you something better.
We have a few more questions for you, Steve. Back on the assessment loss, he was clarifying, or they were clarifying, so no need for assessment loss for single family residents in an HOA?
It can depend on the situation.
Okay.
Yeah, it can depend on the situation. So I lived in, at one point, the first house I bought was technically a single family home, but the HOA did cover our roof, the roofing. It didn't cover anything else, didn't cover the structure. So I still had to insure it as a single family home, but the HOA did the roof. So it's kind of a weird hybrid. And for that reason, if they decided we need a new roof, everybody needs a new roof, then there would have been an assessment, and that kind of coverage would have come in handy. So
Okay.
I'd say let's, I don't know who asked the question, but I'd say reach out to me if you want. We can dive into the nitty gritty and figure out exactly what you need or don't.
Okay, next one. If a rental property is in a trust, what impact does that have on insurance other than making sure the name on the policy is correct?
That's about it, really. We just want to make sure the trust is listed on there so that everything's aligned.
Okay.
Yeah. I've never seen it without doing anything weird otherwise.
Let's see. With insurance companies leaving California, which companies are still welcoming new policies in California? Because I'd hate to go with an insurance company only to get dropped with them after a few months.
Gotcha. Yeah. A lot of insurance companies in California have left the state, and a lot of other ones that are still there have really tightened their underwriting guidelines. And so sometimes, I don't know the exact situation that happened there, but sometimes what happens is we get the new policy issued, and we try to do our underwriting as much as we can before issuing a policy, by the way, just so we don't have these kind of surprises. But if that was not ideal or not done at all, one thing that might happen, for example, is let's say we insure a home, they get the policy, every new property policy, there's going to be an inspection. So the inspector comes out, they don't go inside the house or anything, it's like more of a drive-by. They drive by, take a few photos, make sure it's what we said it was. But let's say that inspector, maybe they're having a bad day or they're just extra nitpicky or who knows, but they're looking at the house and they go, this roof is shot. And then so they'll say, hey, unless you fix this roof, we're dropping your policy and you have 3 months to do it. That kind of thing, we're seeing a little more of that. There can be other reasons as well. But the good thing is there's plenty of other carriers. I have at least 20 carriers in California right now that will still do home and landlord. Fewer for condo and townhome, but we still have a lot. And again, I have backup plans for those, and I even have backup plans for those. So we can always find something.
What insurance do you have in Florida? That's another question from Glenn.
Florida's another tricky state. Florida's probably the trickiest one. I have.
And I think that's, again, situational where in Florida, because there's obviously.
That's a big part of it for sure. Some areas are harder than others. I have, I think, 7 carriers in Florida right now.
Okay.
At least for me, when it's Florida, when we hit really, really good. And when we don't, we don't. But I'm always happy to try. We do have options though. That's a lot more than most can say, which is great.
I think we can move on from this slide. I think that's it for the questions right now, Steve.
Okay. You guys have the best questions. I love it. It's so much more fun to answer questions too than just talk at you. All right. Another thing, proper coverage doesn't necessarily have to cost more. I love this example because you can see what I was able to do for someone right here. This is the exact same property, the exact same client, and same coverages, only on one side, it costs $1,868, and on the other side, it costs $1,781. But if you'll notice, the lower cost one actually has more liability coverage. And I have this little window in the way, so I can't see the other coverages, but I want to say, if memory serves, we had better coverage elsewhere too. So it doesn't necessarily mean that doing it right has to cost more. Sometimes you can do it right and it costs the same. Sometimes you can do it right and it even saves you money, like what we were able to find here. Another Warren Buffett quote, because I love it and it's relevant, is price is what you pay, but value is what you get. And we always want to look for value, because that's that balance between asset protection and cash flow that we're always trying to find. So a couple tips for you guys. Always, always, always have a full coverage policy, and you want to have replacement cost as opposed to actual cash value. One way is I've seen other agents try to lower the cost for people or win someone's business is they'll get them a policy that settles ACV, actual cash value. That's not good. I mean, if there's no other alternative and you have to, that's one thing, but ideally that's not good because that's the depreciated value, right? If that's the case, you're already, you could be underwater. So we want to make sure you have replacement costs, which means you will get enough money to replace the property. We want to avoid exclusions and coverage limitations and all that. I mean, the bottom line is, just don't be underinsured or under the impression you're adequately insured when you're not. See if my slides start to work.
Oh, let me help you out.
Thank you. All right, occupancy, we talked about that. Always make sure the occupancy is correct. So what is the situation in this home? Is it vacant? Is it your primary home? Is it a second home? Is it your vacation home? Is it vacation rental? What's the situation? And then let's make sure we get the right kind of policy for that need. And then we can skip ahead here. Thank you. We want to use deductibles correctly because, again, it's finding that balance of asset protection, cash flow, and also put in peace of mind. And again, that can be subjective. Everyone's risk tolerance and what will give them peace of mind and how the numbers look on the property for cash flow. They're all going to be different. They're based on a variety of factors. But deductible, you want to make it, high enough that you can tolerate it comfortably, where you'll save money on the policy. That's going to improve your cash flow, but not so high that you can never use the policy if you need to. So a general recommendation, especially in the current market, is if it's a single family home, condo, townhome, or if it's a 2-unit, a duplex, 2,500 is a good deductible. If it's 3 or 4 unit property, I usually recommend 5,000. And for wind and hail, 2% is a pretty standard deductible these days. And if you're wondering what 2%, well, 2% of what? What's that? It's 2% of the dwelling amount. So if you had a dwelling coverage limitation of $100,000, a 2% deductible will be $2,000. And that's how much you pay if the damage was from wind or hail, and then they'll go ahead and take care of it after that. Remember, next one, always have a professional property manager, and I will say this all day long. Marshall Reddick is the best property manager I've ever worked with in any market. Lord knows I've had many of them, and I wish I had. Marshall Reddick's been a great experience, and I'm grateful. Maintain a good insurance score. That is a combination of credit score, claims history, debt, like how many loans you have out, payment history, credit history, and pursuing new credit. That's, you're trying to get 5 new loans and get a bunch of new credit cards. Insurance companies, at least outside of California, they're going to look at that. So when we go to give you a quote in states outside of California, the rate can actually fluctuate based upon your insurance score. So the more that's looking good, the fewer claims, the less claims you've had over time, the better the credit score, the less debt, all those kinds of things, you're going to get a more favorable rate. So you're rewarded for that, which is great.
Is that something you can check like your credit score, or is that something you as an insurance broker can just see?
If there is such a thing, I'm unaware of it. I've never found a place to do that.
Yeah.
And every insurance company is going to weigh those things differently, just based on their own internal algorithms and appetite and how they rate things.
Mm-hmm.
But certainly, if you keep the better you keep those things, the better your rates. Yeah. All right, let's try moving ahead here. Okay, always make sure your tenants have renters insurance. I think that's probably a given, but that's a big one. And if you have a good property manager, again, like Marshall Reddick, work with them. They're going to provide an extra layer of protection for you as well, and they're going to monitor all that stuff. Make sure they do have it.
Make sure your tenants have the proper insurance, yes.
That's right, and now you've got an extra layer of protection as well for yourself and your property. Like, for example, there could be a situation where the tenant trashes the place. If they have a renter's policy, it's possible that could come out of the liability coverage, just depending on the situation. So that's nice, not a claim on your policy. We talked about this. Number one thing for the trust and LLCs is just make sure they're properly integrated. And that's true on the policy itself, on the property management, with the lender, with the umbrella. Just everything needs to match up and be aligned so that you're truly getting everything working the way you want it to and getting the coverage you hope for. Also best to have an umbrella policy for further liability protection. Actually, once I bought that first rental property in Toledo all those years ago, the next thing I did is buy an umbrella policy. And just having that, I just slept so much better. Just knowing it was there just in case. And again, one single umbrella policy will cover everything under it. Home, auto, boats, jet skis, rental properties, everything. Depending on the area and the lender's requirements, you may need flood insurance, you may need earthquake insurance, you may need wind insurance. Sometimes coastal areas, like in the Gulf area, a policy may not cover wind, and they need a separate wind policy for that. So if you have a place, property in those areas, that's something to double check on, just make sure you are covered for that. Last thing you want is there's a hurricane and you realize, oh my goodness, I didn't have coverage for it. And there are separate wind-only policies too. Last tip is just don't be too cheap. Sometimes you do get what you pay for, and you don't want to find out the hard way. Personal example, I had a property, and this is how I found out what a service line was. The service line broke. That's the line that brings water in from the street into the property so that the tenants could use it. That service line broke. Policy didn't cover it because that particular carrier just doesn't even offer service line coverage. $9,000 fix. That was a bummer, out of pocket, you know, okay, live and learn. So here's Steve thinking, okay, well, I'm gonna go find myself another policy for this property that does cover service line, just in case. Now that I know, don't need to repeat that mistake. So I find another one, but it was $1,000 more. And I went cheap. And I just said, I don't want to spend that extra $1,000. It's going to impact my cash flow. I just spent $9,000 to get the service line fixed, and I didn't do it. And guess what happened 3 months later? That service line broke again. And because I just was kind of a cheapskate, I had to pay another $9,000. Would have saved me quite a bit.
Glenn had a question for us. Do insurance companies have limits on number of rentals within an umbrella policy?
Some do, yes. Some carriers will only let you, depending on the carrier, right? Some will only allow you to have up to 4 rentals, some will allow you to have 15. That one I mentioned earlier that I just love, the one that will let you put the LLCs and trusts on it, they will allow, at least last I checked, which was probably 6 weeks ago, they'll allow up to 40 properties.
That's amazing.
Here's what's even cooler. That's not 40 doors, that's 40 properties. So
Wow.
if you have a fourplex, that only counts as 1. So they're awesome, and their rates are fantastic too. So I can't say enough good about those guys. They're just great.
Do we have insurance companies in Gulfport, Mississippi? I think that's Mississippi. Yes.
I haven't done Mississippi yet.
Okay.
I have a few carriers that will. I just haven't had the opportunity. So happy to try. Any others on there?
That's it for now.
Okay, we'll keep going. So here's some other cost-saving tips for you guys. Ideally, depending on all the numbers and what you're trying to do ultimately, but the more mild the weather, the more likely there's going to be fewer claims and therefore lower premiums. Newer homes also tend to lower premiums. I think that probably just makes sense, right? An older home is more likely to have things breaking down and causing problems, so more likely to have claims. Newer home, not as much. So those are rated better and they have lower premium. Premium, just in case I'm not sure I said that earlier. Premium is just what the policy costs. How much does it cost? A newer roof will have lower premiums as well. Most carriers don't really want you having a roof that's more than 15 to 20 years old. Some have even gotten more strict than that, especially in Florida, right on the Gulf Coast. As much as possible, look for bundle discounts, and that can go across state lines. So if you have a rental property in Clarksville, Tennessee, and you have another one here where I live in the Woodlands, Texas, if they're with the same carrier, a lot of times you can still get a bundle discount, which is cool. And then having a professional property manager, that with most carriers will give you a discount as well. And can you skip me ahead there? I think mine's stuck. What would I do without you? All right. Hey, there we go. That's me. If you want a quote or just a second opinion on what you've got, you're welcome to give me a call or email me. This is my contact info here. I went ahead and just, for Marshall Reddick clients, I went ahead and that's my personal cell. And then I created a separate email address just for you guys. Reason I did that is usually after these webinars, we get a ton of calls to the agency, and a lot of people, you know, our team at the front desk answering the phone is like, they don't know what Marshall Reddick is, or they get confused, or they think they're looking for someone named Marshall, and you know, it just takes a while to find its way to me. So I just thought, hey, let's just bypass that And I'll just give out my cell, which is right there on the screen, and then also a separate email I created just for you guys. So you can reach out to me directly, and then I monitor that stuff all the time. If you do call that number, leave a message, because chances are, if it's in the middle of the day, I'm probably on in a meeting or on another phone call. And you know, these days everything looks like spam. So if that happens, I'm not ignoring you. Leave a message, I'll call you right back just as soon as I'm off the phone. And the call on average takes 3 minutes or less. So not a big time commitment, and let's see if we can save you money, find you a better deal, check something out and get you the coverage you need for the right price. So I think that's my last slide. If you want to go ahead, just take a peek. Yep, I think we're good. So I'll let you take it away from there. Hope that helps, guys. And thank you again for sharing your time with me tonight.
Sure. This last slide we have right here is just our Marshall Reddick website. If you go to our Learn tab right here, we save all of these for you guys to go back. If you missed a past webinar or anything that you're interested in, just type it into the search bar right here, and I guarantee we've done something on it for you to take a look at. And right here is just, if you want to give us a call for a consultation, what you can expect. And last slide is just my contact information for anybody that wants to write that down and give me a call. And I believe that is all we have. We did go over a little bit, but if we can stay open for a few more minutes if there's any more questions that anybody wants to throw into the chat. Yep, that's our last one. Perfect. But I think that's all we have. So I think we can go ahead and, again, we'll wait like 2 minutes. What do you think, Steve?
Yeah, I'll give it a minute. As long as I don't hear a knock on the door when my kids are here. Their grandparents have them tonight. They'll be back in a minute. But
thank you guys for joining tonight, though. And I loved all the questions. It was great to have those in so we could answer those right away and not have to wait till the end.
Absolutely. Those are fun.
One more question from Noreen. Do you cover in Massachusetts? Oh, and they're asking for your contact info. I'll go back to that slide.
What? It cut out on mine for a second. Where was it?
That's okay. Do we do coverage in Massachusetts?
I have not had Massachusetts yet. I do have a couple carriers, but I haven't had the opportunity, just like Mississippi. Happy to try.
Are we able to put Steve's info right here into the chat for people? I mean, it's on the slide.
They're gonna get the email.
Oh yes, you'll receive a follow-up email too after the event that'll have all of the slides in it. So if you didn't get any of this written down, you'll have his contact info.
There we go.
Thank you, Denise. Perfect. Oh wait, let's see. Edmund, can I send you a text message so we can connect on the 17 unit complex in Glendale?
Absolutely. Happy to. Yeah.
Go ahead and send that text over, Edmund. There's still about 23 people on here, so I'm going to leave it open for a few more minutes if we have any more questions. Glad we got through all of our technical difficulties there, Steve.
We made it. I wasn't sure how that was going to go, but we did good.
Our slides went rogue for a minute, but we're okay. We good?
Yeah.
We can wrap it up?
Yes.
All right, you guys, thanks so much for logging in. We're going to go ahead and close it out now. Bye, Steve. Thank you.
All right, thank you.